we are done with analyzing the first two stages, customer related and supplier related. Let's now take 3 and 4, that's internal procedure related and government related together, because they are interrelated. You'll see how. In normal scheme, you will have to file too many returns to the government. Monthly details for outward supply, monthly details for inward supply, monthly returns, annual return, and these 4 are just the bare minimum. There are even more, but these are like the most compulsory returns. The others are if you're engaged in some sort of activity, you'll have to file. So we'll not get into those. We'll stick to these 4 to analyze our situation. The first of the returns that you'll have to file includes details for monthly outward supplies. Now, supplies is a very broad term and includes lot many things in addition to normal sales, like transfer, barter, exchange, license, rental, lease, or disposal made in the course of business. The supply detail that you'll have to provide should include everything. Literally, the definition of supply has brought in to its ambit everything that moves into the taxpayer's premises or even moves out. So the return of outward supply requires details of invoices, debit notes, credit notes, and revised returns segregated for B2B transactions, B2C transactions, interstate, government transaction, or final consumer-based dealings in exempted goods. So for maintaining all this information, you will need to maintain proper systems, hire experts for return filing. All of this has a huge cost. The second return, which is for details of inward supplies, also requires all this information for invoices, debit notes, credit notes, and segregated for all the different categories that we discussed for outward supply. A very complicated return. Third is monthly return. In monthly returns, you'll have to add up the details of inward and outward supply. You'll have to give details of input tax credit claimed. You'll have to give tax payable and tax paid details. Not only this, you will have to match reversals and reclaim of input tax credit and output tax liability. Imagine if you are below 50 lakh, but your number of transactions are huge in a day or in a month, then this would be a problem for you. You'll have to track all of these details for each and every transaction you enter. The fourth return that you'll have to file is an annual return to be filed once a year. In the annual return, you'll have to give all of the details of the monthly return consolidated for the entire year. You'll have to perform reconciliations to tally everything based on your books of accounts. You'll have to match input tax, you'll have to match output tax liability, and if you're above the eligibility criteria, you will have to submit audited financial statements along with your annual return. So in addition to systems, you'll also have to appoint auditor. As you can already imagine, filing returns requires a lot of efforts of maintaining proper record systems, experts, auditors. And this is exactly where the composition scheme comes in with a big advantage. In composition scheme, you'll have to file only very few returns in comparison to the normal scheme. Instead of all the 4 that we've talked about, you'll only have to file a quarterly return. No monthly returns at all, just quarterly return and an annual return. Quarterly return would include 1 quarterly return for inward supplies, which has to be filed in the form GSTR 4A. Now here's the catch. To file this form, you have to do absolutely nothing. It is an auto-populated form, meaning the return filed by your supplier, because it's inward supply, remember, you're purchasing goods coming into your premises. So from the return form filed by the supplier, this form will be auto-populated. All the information will be picked directly from the supplier's form. You have to do absolutely nothing. Simple, isn't it? The second is quarterly return for outward supply. This one is to be filed in GSTR 4 and it would include details of outward supply, of supplies including goods and services. It would also include details of inward supply. Don't worry, it is all auto-populated from your first form, GSTR 4A. It will also include tax payable details. Now this is a bare minimum that you'll have to maintain. A list of all your sales. That's all that you'll have to maintain. In case you do not agree to the auto-populated details of GSTR 4A, you have an option to submit the details of any additions, modification or deletion in this form. The third and final form that you'll have to fill and submit to the government is the annual return. It is nothing but a consolidation of all the quarterly returns. You are filing only 4 returns quarterly, so you'll have to consolidate all the details of just 4 returns and file the annual return. Easy. There is no audit required. You're not required to maintain books of accounts itself, so there's no question of audit. Reconciliation is also very easy because tax calculations are easy. And so, as you can guess, this step is the biggest advantage that composition scheme has to offer to you. Let's take stock. Simple return, simple books of accounts, and no experts and auditors required to be appointed. All 3 big advantages.